So the first thing I want to ask you about is market valuations. Can this bull keep going, or have we reached a point that it's enough?
Well, this bull can go on for a while, but I do think every day this rally continues, there's more vulnerability. Right, we've got very stretched valuations, 17.9 times trailing PE, so that is a little scary, and we've got that compared to a 10-year average of 14.1 times earnings. So there's vulnerability there. Also because I would argue that so much of the run-up has been due to expectations. You could almost say that the stock market is priced for legislative perfection, and I'm not sure we're going to get close to legislative perfection. So there's vulnerability there. But that doesn't mean the stock market can't run. In fact, there are two key drivers. Still very accommodative monetary policy, as well as a global economic growth environment that's pretty significant.
You mentioned that the market is priced based on legislative perfection. Can you tell me, like, what is the one thing that could make that all fall apart? What is that most dependent on?
So I think it's most dependent upon the corporate tax cut portion of this large tax plan. And what I would say is what we've seen thus far is something of a wish list, and that we're likely to see a lot of negotiation, bartering, horse trading. What needs to be preserved is that 20% corporate tax rate, as well as the immediate expensing of capital investment. That's what directly impacts companies, their balance sheets, their earnings, and so to me, that's what needs to come to fruition in order to support the stock market.